Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options placed for the upcoming week. Hopefully you guys had a very nice weekend so far. Now in today's video, keep in mind all the options plays are going to be for selling options, more specifically for selling put options as part of the wheel strategy that I like to run on the channel. Selling puts, guys, is a very easy strategy to do. 3 reasons why I like it. Number 1, it's very easy to understand, manage, and it is very scalable up or down depending on the size of your account. Number 2, it's very passive and requires low time management, which means that I can be in places like this and still run the strategy and not have to be glued in front of my computer screen for 8 hours a day, 20-30 minutes a day, and that's pretty much it, even wherever you are on the planet. And now lastly, it has a very high win rate too. So today's video, guys, we've got a few things to take a look at. I'll take you guys back inside. We're not going to do everything outside because the sunset's about to be had and it's going to be dark out soon. But what we're going to do in today's video, 3 things. Number 1, going over the expectations for the week. What do we have to look out for in terms of macro data, in terms of earnings as well that could possibly impact the markets, and any, kind of consequential tariff agreements that may be talked about too. Number 2, we're going to be taking a look at the rules of the strategy. What do I look for in order to write puts, in order for it to be very passive, for a very high win rate, and to also generate a very decent ROI? And then thereafter, guys, of course, number 3 is going to be the top 5 options of the week. And of course, as per usual, I have a ton of bonus plays for you. So let us jump right into the action. I'll take you guys back inside, but before I do, enjoy the view a little bit, all right? I'll see you guys inside. Let's get right into it, shall we? Okay, so in terms of the preview for the week, guys, well, all things considered, last week was a fairly muted week. We did get some fundamental data that was kind of mixed, right? You guys remember that last week on the Wednesday session, we got some ADP jobs numbers that were far below the expectations. Initially, the market took it the wrong way, and then throughout the day, the bulls were able to bring it all back. And that was then counterbalanced with the Friday session, in which we had a non-farm payrolls come out that was actually better than expectation. So offsetting one another, and the unemployment rate still maintaining a 4.2%. In terms of this week, in terms of the macro, what we have to look out for, guys, is quite simply on the Wednesday session, the biggest session of the week, in my opinion, is going to be CPI. That is then followed up across the board with producer price index on the Thursday session. Then we wrap it all off on Friday with the Michigan Consumer Sentiment Report. All in all, I think it's going to be a question of Wednesday and Thursday. Those inflation reads, if they come in worse than the expectation, they're already set to come in higher than last month. Last month on the CPI was 2.3. We're expecting about 2.5 this time around. If it comes in much harder than expected and kind of leans into that whole tariff narrative, I do expect the markets to have a little bit more consolidation in them overall. And one other thing that we have to take a look at for this week, guys, is some trade deals, namely this one right here. On the Monday session, there will be US-China trade talks in London. That will be happening for about 2-3 hours over the course of the day on Monday, so pay special attention to that. That could also sway the market in either direction, but all things considered, it should be a fairly normal week in terms of the macro overall. In terms of company earnings, well, we do not have that much, as we know that we're kind of wrapping up the earnings season as a whole. The biggest day of the week is probably going to be on Wednesday, where we get earnings from Oracle, and then Thursday, special shout out to a company like Adobe, which will be reporting. But all in all, no major market movers. The biggest one of last week was Broadcom. They had fantastic earnings. We covered them on the channel, but they were their own worst enemy. They had ran a ton into earnings. They put up some good numbers, but it just was not enough to justify a very short-term 15% run-up into earnings, so they sold off a little bit. Oracle and Adobe, well, Oracle may have that same problem. They've been running a ton into earnings. We'll see what happens right there. They're coming right into our support, or rather resistance range right now for the bulls. If they have good numbers but not good enough, you might just have the CrowdStrike effect, the AVGO Broadcom effect, etc. But it should not move any other major markets, all things considered. Even though it is a decent component in the QQQs and the S&P, it's probably not a market moving one such as AVGO or such as Nvidia had just a few short weeks ago. So no real earnings to speak of. And in terms of the technical outlook, guys, well, here is when we have to be a little bit cautious, right? We're still very bullish on the markets overall. The bulls are still in massive control of both the weekly timeframes right now. As you can see, it's a very, very clear weekly uptrend. Let me just get my brush. Very, very, very clear weekly uptrend with the bulls trying to push into resistance right now. And that is true on the SPY, but also true on the QQQs as well. Looking very good for some trend continuation and completion of the pattern into pretty much our resistance range. On the QQQs, that stands 537 down to 525. And on the SPY, that stands roughly where we are right now, 600 all the way up to about 610. If any of the macro reports come in negative, or if ever this China trade deal or China trade talk does not come in line with what people are expecting, meaning that there's not much progress, well, expect the prophecy to be fulfilled, right? We might just reject from resistance and come back into a little bit of consolidation phase. That being said, the bulls have tons of space on the weekly. Anything above 576 would just be looking for a weekly higher low. And on the QQQs, same concept, right? Anything, well, they never said it over here. It's all the way down there still. 429. Anything above that, just gonna be looking for a higher low into the EMAs, into below support. So I still do believe it's a fantastic opportunity to be writing some short puts on some of our favorite companies, provided that we respect all of the strategy rules. Now, speaking of the strategy rules, before we get into the top 5 options plays, let us just briefly cover these strategy rules, guys. I used to do these like 10 minutes a piece. However, now I'll just be showing you them. Take a screenshot and I'll leave 2 links down below in the video description. One for the bull market strategy and one for the bear market strategy, in case you still want to be a bit more conservative in the way you write your options for this market. The bull market strategy is this one right here. Keep in mind, I'll not go through these each by every line by every line. I'll just take a screenshot of these rules. Every single one of these rules is highly important. The first one, a high quality, high conviction company, guys. Never write any puts on companies you do not want to possibly own. Writing puts is very simple, guys. It's basically a buy limit order that pays you. You write a put which acts as a buy limit order under the market for 100 shares. If it closes above that price by Friday, you just get to collect all of the options premium. If it closes below that strike price, you have to buy the shares, but you still get to keep the options premium. So it's a nice way of getting shares for cheaper than the actual share price. These are the bull market strategy rules. I'll show you the bear market strategy rules overall. These are the bear market strategy rules. The only main differing point here, well, there's a few differing points, but the main one is we're going for slightly less ROI on the bear market one, and it's a slightly more conservative strategy. If you ask me which one am I using right now, my answer is it depends on the company. Companies that are very volatile that I still want to play, but maybe have run a little bit hot. Looking at you, HIMS, right? HIMS is a great company when it gets some declines, but I still want to play very far away from the market because there's not much support overall, right? But a company, let's say something like, I don't know, like Nvidia maybe, I'll probably be using the bull market strategy because I'm looking to possibly accumulate some positions. I don't mind being assigned in the mid 120s, and then we're going for the long continuation pattern because it's not really that extended from any support levels overall. So for me, it's going to be a mix of the two, but it'll be dependent on the stock overall. So those are the strategy rules. As I said, if you want me to explain more in detail, every single line of these strategy rules, it's very important, especially if you're new to the channel. For you guys that have been here for a while, you guys knew that for about 2 years, I went through these every single video, every Sunday for about 10 minutes. We're not going to do that anymore. Just trying to keep the videos as short and efficient as possible for the YouTube algorithm, of course. But if you have not seen the strategy rules, guys, take a look at the 2 links down below in the video. It'll only take about 8 to 10 minutes of your time each. You learn them once and then you have them forever, right? So make sure to check out those 2 links down below. I go through every single one of these lines, each and every single one, spend about a minute or 2 on each, and why each and every one is very important. Do not break any of these rules. That's why it's a whole strategy, right? If the strategy was very easy and required only one of these or 2 of these rules to be maintained, you would only see 2 lines here. Don't get complacent even in this market overall, right? And don't be greedy with the market. That being said, guys, that's it for that section. Let us now jump into the top 5 options plays for the upcoming week, shall we? Okay, so stock number 1 of part of the top 5 options plays we just talked about, it is going to be Nvidia. Nvidia had some fantastic earnings. The valuation of the stock in around 140 is not that bad, even though it's not as good, obviously, as it was in the lower 100s. It is very manageable. You also have the bulls getting some nice momentum right now on the MACD, and overall, it is a beautiful weekly uptrend that, in the event we get some sell down, I will be looking to place some sell puts under the market, trying to target as low as possible into the support range, 135 down to 125. The expected move for the week, guys, is 137.08. As per the strategy rules, you always want to be writing under the expected move. If you don't know how to find it, just go to this website right here, barchart.com, type it into Google, bar chart, expected move, Nvidia, or whatever stock you want to pick, and then you're just going to be going down here, look at the expected move to the lower end of the price, and that should give you this number right here. You want to be writing below that to make sure that you have the best odds in your favor. That being said, if we're targeting below the expected move, it is 137.08. 1.08 for this week. We know support is down here, 135 down to 125. The goal is to try and get as deep as possible into that area while still getting paid a very handsome ROI for it. So let's take a look at some of the contracts on NVIDIA right now, and we'll go shopping under 137, see if we can get 135, maybe better, into that support range. And let's have a look right now as the put contracts load. So let's pull up NVIDIA right here, and we're going to go to the June 13th expiry, which is this Friday. And as we can see right here, first thing we should be doing is looking for the 0.5% rule. 0.5%, guys, is very simple, right? If you want to find it in your head without using a calculator, just divide the strike price by 2, and then you should have that in cent increments. So half of the 135 range roughly should be about what? 65, 70 cents. So you know that you should probably be looking at the 135s or the 134s, which are slightly under that, right? Here is your 0.5% rule. The bear market strategy is 0.25% per week. So you just take this, divide it by 2, so you'd be looking for roughly 35 cents. As you can see, it's all the way down there at the 130s. So for me this week, depending if I want to play the bull or the bear market strategy, it's going to be a few of these strikes, either the 135 or the 134s or the 130s. Now, these are not set in stone, guys. Be dynamic with your strike prices. If NVIDIA opens up red on the Monday morning, you will get even better strike prices than that. Maybe the premium makes its way, right? Right now, we're having on the 134, 135 strikes, you're finding about 60, 75 cents, right? Well, maybe if NVIDIA drops 2 or 3% on a Monday or the Tuesday session, maybe this premium makes its way down here on the 133s, 132s, right? So be dynamic with the strikes. The goal is to try to get the lowest possible strike price into a support range to put all the odds in our favor of not being assigned. And if we are assigned, at least we know we're getting the best possible price for that week in relation to the expected move, right? So for me this week, at a first glance, the range in which I want to operate in is between 134 and the high 120s overall. I would not mind picking up some shares of NVIDIA in this whole support range. That is stock number 1. Stock number 2 is going to be another one that's been making its way back on the channel for a few weeks in a row, and that is going to be Amazon. And yes, Amazon has been pulling away. Why do I still like it? Amazon, in my opinion, is still undervalued for the amount of growth that the company has in the foreseeable future. They're currently trading just above a 30 in terms of forward price to earnings at around a 1.6, 1.7 peg overall, but the revenue and EPS expansion is very solid. All lines of business are really printing higher, whether it's e-commerce, AWS, advertising, their Amazon obviously, their Amazon Video services, and so many more, right? Prime Video overall. Now, that being said, Amazon's expanding, but we have left a little bit of an area down here talking about the 200 to about 192. It's an overall gap-filled territory area. The weekly momentum is good for the bulls right now on the weekly time frames. So that being said, if we do have 1 or 2 negative days, last week, myself and a few of our Discord members, right, we were able to smash the 200 short puts and below. Well, that has been a trade on the channel, guys, now for the past 2-3 weeks. I would not mind picking up some Amazon shares there. Now, even though it's not close to the support, which is lower 190s, I don't mind picking up Amazon. I think the valuation is fair. 200 down to 190 and kind of DCA my way into that zone. That being said, for this week, the expected move is 207.94, or rather 208.05, excuse me, the yellow line right about here. So obviously we want to be going as low as possible here, trying to get the lower 200s if we can, while the stock is at 213 right now. Let's have a look on the Amazon options chain. What can we get? Or possibly, are we going to have to wait for the stock to pull down a little bit more? Well, let's have a look for the puts on the Friday session. And as you guys can see right down here, you will see that the lower, well, number one, where's the 0.5% rule, right? So half of the roughly $200, $210 range is about 100, 105. So you need to see about $1.05 on the bid here for the 0.5% rule. Well, right there, that is the 207.5. That is below the expected move of 208. Now, half of this would be roughly the 205 strike, which shows about 50, 60 cents on the bid. Here's your bull market strategy rules right there. The bear market is 1 strike lower. Now, however, that being said, if Amazon pulls back after this very nice daily uptrend outbreak, if it pulls back for a higher low, comes down into the expected move, maybe then you can find some Better strikes on Amazon, talking about the 205, maybe there'll be more premium here, maybe the 202.5s or the 200s. So at a first glance, guys, for me, the range in which I want to operate this week on Amazon is roughly 207.5 down to 200, as low as I can possibly get, depending on the price action of the stock Monday or Tuesday. If it declines, perfect. Now, you might be asking yourself, what do we do if Amazon just skyrockets to the upside? Do we chase and chase and chase? The answer is no, guys. You just go to another play. We're not in the business of chasing the stocks. The wheel strategy is not the correct strategy to chase stocks to the upside. It is a strategy meant for overall defense and premium farming. If you're looking for upside bets, right, capital efficiency is front and center. For that, you'd have to use call options, leap call options, call debit spreads, something like that, right? The last thing you want to do is chase Amazon higher 100 shares a pop, right? It's just not very capital efficient, and that's not what the wheel strategy is meant to do. That being said, that is stock number 2, and that is Amazon. Stock number 3 is going to be Google. Google has been on this list for God knows how many weeks in a row right now, all the way since the month of March pretty much has been on this list. That being said, decent support below, 170 down to about 161. The bulls are trying to regain some semblance of control. Very nice engulfing move right now. In my opinion, they're trying to go for the daily uptrend reset overall and just trying to go for the weekly uptrend completion pattern. It's been a very beautiful weekly uptrend. Higher lows are now set. Might be looking for some upside, and the weekly momentum is indeed crossing too. That being said, the fundamentals of Google are very, very good. The risk to reward offers some pretty good risk premium right now, in my humble opinion, and the valuation is very, very, very cheap overall. The cheapest amongst all of its big tech players, right? That being said, if we do get a little bit of a pullback here on Google to start off the week, I would not mind selling some put options in the 170 down to 160 range, our big area of support. The expected move for this week is 170.41. Let us go shopping on Google and see what can we possibly find below the 170 strike. So let's pull up the chain real quick, and we'll go shopping together here. So looking at Google, you can see that when we're looking, first off, where's the 0.5% rule? Half of 170, guys, is roughly what? About 85 cents on the bid. So you can see here the 170s are a little bit more expensive than that, right? They do come into the, if you look at the bull market strategy, it's 0.5 to 0.75. Over that, you're getting too greedy. This is still in line and fine and in around the expected move. I would not mind doing the 170 strikes. However, if Google drops on the Monday morning, or on the Tuesday session as well, maybe you can get access to the 167.5s. The 167.5s are already good for the bear market strategy, but if you're using the bull market strategy, this one is a little bit light on the premium. So for the range of movement for me, the range of price action in which I want to operate, depending on the stock's movement Monday or Tuesday, right? If we can find some declines, we go shopping for better and better strikes. That being said, the range of price action for me that I'll be looking to shop for this week is 170 down to 165. Be dynamic. Try to get as low as possible while still getting the minimum requirement for your ROI. This is the area that I want to go shopping on Google, right? 170 down to 160. But for this week, 170 down to about 165 seems like a very fair area of pullback for me overall. That being said, that is stock number 3. And let me just check the time overall just to make sure that we're doing good on time. Yes, we are making these videos as short as possible, guys, because I know your time is precious. And now stocks number 4 is going to be 2 smaller growth stocks overall. The first of which is going to be Rocket Mortgage. This one as well has been on the channel for who knows how many weeks, so many weeks in a row. Why? Because it's very decent support area right now, right? 11.65, roughly 12 bucks, let's call it, down about 10 bucks is a big support range. At least it has been for roughly the past year of trading overall, almost a year and a half. And prior to that, it was resistance. Suffice to say, it's a hotly contested area by both the bulls and the bears. This time, it will be the bulls acting as support down there. Rocket Mortgage also got approval from Redfin shareholders last week that they were able to acquire the business overall. And Redfin has been, Rocket Mortgage has acquired Redfin and also Mr. Coop Mortgages. They're looking to become one of the largest mortgage players in the online space. And I think they're doing a very good job at that. That being said, this one is closely tied to interest rates. Anytime interest rates skyrocket, obviously it's not good for mortgages. The stock does come down, but if you can see, right, yields have been kind of, especially the 20-year yields, they've been cracking into the 5% range quite a few times over the past 2-3 weeks, but Rocket Mortgage has not really dipped below the $11 mark. That's why I like farming this one overall. It is beholden to interest rates, but it has not been affected that much. That being said, the expected move for the week is 12.15 on this stock, so let's go shopping here if we can find some premium below that $12 $1.15 mark. In my opinion, it's going to be the 12s. I've been playing the 12s with my Discord members, guys, for like a month at this point, every single week in a row. So far, no assignments. If you take a look at the 12s right now, you can see you're getting roughly 10 cents is the midpoint right there, and it is below the expected move. If you want it to be a bit more conservative and make sure you don't get assigned, well, maybe you try to go for something like the 11 5s and try to go for a 6-cent bid. I know 6 cents doesn't sound like a lot, but it is 0.5%. The good thing about this strategy, it's scalable. Some people only want to do 1 contract, some people 2, some people 10 or 20 contracts, depending on the size of their account. So obviously, 0.5% is 0.5% on any amount of capital that you use. That's why I love this strategy overall. So that is stock number 4, Rocket Mortgage, and the other one as part of the stock number 4 is another cheap one. It is SoFi. SoFi coming up $14 to $16 into the resistance range. I've been talking about this one. Also, we've been writing puts here, guys. The Discord members and we've been farming SoFi for so long now, pretty much since March, right? You guys know if you've been watching the channel, I already have some shares. I got assigned before. I've been farming the heck out of covered calls on this one. It's been very advantageous, but in the event I wanted to build a further position on SoFi, I'd quite often be targeting the $13 down to roughly $11 range and just scaling into the position, right? That being said, into resistance, if you get a little bit of a drawback, no problem at all. The expected move is 13.5, but I want to be going shopping lower than that, in the $12 range. Let us go shopping on SoFi right now and see, can we actually find anything down there into the roughly $12 range, right? 12, $12.50, something like that. Decent valuation for the company down there. And as we can see right here, unfortunately, at the 12s, there's nothing. At the 12.5s, not quite. You'd want to see about 6, 7 cents. So essentially what that means, you need a day in which SoFi is red. Monday or Tuesday, if the stock pulls back a little bit, maybe you get access to the 12.5s. As of right now, the only premium that's there is at the 13s. The 13s is not bad, but since it is a little bit higher than we kind of want, we want to be, further down here into the 12s. Well, maybe if your maximum contract size on SoFi ever can possibly be 4 or 5 contracts, maybe you only do 2 or 3 contracts here at 13, and then if it keeps dropping, maybe you save some buying power, and then you DCA into the stock when it clips down into there, into the actual support range. It doesn't always have to be black or white, right? It doesn't have to be all and every single buying power dollar goes into there. You can layer the different strikes if you want to, especially for a stock as cheap as SoFi. So those, Rocket Mortgage and SoFi, are 2 cheap growth stocks, and those come into the 4th position for the top 5 options for the week. And now the 5th position is going to be a combination, again, 2 other stocks. So actually, it's not top 5. It's more like, top 7 at this point, because I'm giving 2 for number 4 and 5. Anyways, number 4 and 5, or number 5 rather, 2 parts. Number 1 is going to be Uber. So Uber, love this stock overall. Daily downturn, you just might be looking for a bit more consolidation. The stock came roaring into the all-time highs and now has pulled back into a bit of a weekly consolidation phase. I love Uber overall. The valuation down here at about 83 is very good. Their growth is very good overall, and we know that their network status is going to place them front and center in terms of partnering with different autonomous vehicles. In my opinion, for Uber, guys, it's not one or the other. It's not autonomous vehicles or Uber. It's a combination of both. Before one puts the other out of business, it'll probably be years and years of synergy where autonomous vehicles, to get more and more customers, will utilize an Uber network overall, because Uber has the largest network and they have the most customers. That being said, I think the stock is good, and down here is a retest of prior support that we just blasted through, right? So I really like the lower 80 down to $77 range. The past 2 weeks in a row, we've been writing these with our Discord members, and it's been a fairly profitable endeavor. That being said, the expected move for the week is 82.46, but we want to be below here. Let's see if we can actually get something in the $80 range, shall we? So looking at Uber real quick, taking a look. Uber, let's pull it up. So Uber, take a look at the put side right here. As you can see, right, when we're looking for the 0.5% rule, we need half of roughly 80 is roughly what, guys? 40, right? So you need to find roughly 40 cents. Matter of fact, you're finding that at the 81s. That is roughly 0.5% for the week, and it is below the expected move of 82.46. The bear market strategy would be half of 40, so you'd probably be looking for something like the 79s. However, if Uber stock drops on Monday or Tuesday for XYZ reason, well, then maybe you get better premiums at the 80 81s, or maybe the 0.5% rule makes its way down to the 80s. Maybe you can even find 30, 40 cents at the 79s. Be dynamic with your strikes, right? If you ask me my opinion, my favorite range that I want to play on Uber is 79 down to 77. So if you get a nice little sell down here early into the week, maybe that does free up the strikes. As I said, I'll be looking for the 79 down to $77 range if I can find them overall. So that is part number one of stock number 5. The second one is PayPal. I haven't talked about this one for a long time on the channel, but PayPal is showing some decent characteristics right now. Beautiful weekly uptrend. The higher lows are now trying to be set by the bulls. Weekly momentum in terms of the MACD is crossing, so you could argue that the bulls are possibly going for it. So any little last declines here into the bottom end of these guys, $70, could free up a last batch of short puts for us to possibly be playing this one under the market. That being said, support, true support, actually starts at about 68 all the way down to 57. That's the bottom end of the last 2 years worth of support range. So if we get a small decline here on PayPal this week, I might be interested in trying my hand at it. 69 down to 65. Now, this one does not have the best implied volatility, so you do need to find this one on a red day. The expected move is 71.45. Let's go shopping on Uber and on PayPal and see, can we find something below the $71 strike, preferably more towards 70 or 69. So as we can see right here, if I pull it up, oh, that's not the weeklies. Let me go to the weeklies right now. If you can see right here, half of roughly the $70 range is going to be about 35 cents, yeah? As you can see, that's at the 71 strike. It is below the expected move, but it's not quite 70 or 69. As I said, PayPal's IV is very low, so you need a big, or not a big red day, but you do need a red day to free up the actual strikes that you want. If you ask me for my desired strikes this week, I'll be looking to shop for, if we get some red, 70 down to 68. I would not mind writing those strikes, whether I'm using the bull or the bear market strategy. Be dynamic with the strikes overall. And with that, that wraps up our top 5 options plays overall. Actually, it was more like a top 7 options plays. So hopefully it gave you guys some ideas and some insights into how I trade this strategy in a very dynamic way, right? All my strikes are not set in stone. It's a range coming into support in which I want to get the lowest possible strikes in that range to put all the odds in my favor of either not being assigned, or if I do get assigned, getting the best possible price for those 100 shares, right? So that's pretty much everything for the top 5. Now, let's jump in. I have 10 bonus plays for you guys in terms of today's video, as per usual. If you want more than that, I used to give a lot more than that, but I'm reserving a lot of that for our Discord members overall, right? But I still will give you guys 10 bonus plays overall. So at the end of this video, you should be able to walk away with an absolute ton of plays for the week in preparation for what we might have. So I'll be splitting these into growth, value, and then large account plays. Number 1, more growth names that I haven't talked about. Number 1 has to be Apple. Now, for these, I will not be giving the expected moves. I'll just be giving the range in which I want to operate, right? Now that you guys are pros at the strategy, I'll let you guys find the expected moves on your own, and I'll let you guys price out the strikes on your own too. Apple, the reason I like it, guys, support below, trap between a range, 196 down to 189. I want to be as close as possible to 190. Even though Apple is slightly expensive right now, I do not think it will get left behind by the SPY or the QQQ if we continue moving to the upside. However, if the SPY and QQQ go into a daily or weekly consolidation phase, Apple will decline. And as a result, I want to be targeting the lowest possible strikes that I can, and that is lower 190s. It is the top end of the 2023 range overall. That's stock number 1. Stock number 2 is going to be Reddit. So Reddit usually moves in line with other high-flying names such as AppLovin, or rather it used to, such as Axon, such as Hood, right? But now Reddit has kind of been left behind. All the growth stocks have kind of left for the moon, and Reddit is just nowhere to be seen in terms of that. However, there is a very nice established support range below us, 106 down to 93. So if I see Reddit on a big red day, and I can find some premium in the lower 100s, 100 down to about 91, I would be tempting to go shopping into that support range overall. Stock number 3 is going to be Decker's Outdoor Brands. We actually did a piece on them just a few short weeks ago to where their earnings, as a matter of fact, I don't think I'm going to have them. Unfortunately, I think I erased them on the chart right here. Anyways, their valuation is pretty decent down here. Their brands are doing well. The only problem, well, they kind of mentioned tariffs here. There might be $150 million impact for the year. That is the top end of the target. I don't think it's going to be a problem for the company. All their brands are growing well, both domestically in the US and internationally, especially internationally. Shout out to the Asian market, which did really good for them. That being said, Decker's Outdoor Brands, if I can find some strikes here below 100, talking about 100 down to $90, I'm always a big fan of looking for for this one on a weekly basis. That is pricing from all the way back here in 2023. The company's unwound a lot of its hype cycle and now trading at a very fair price to sales in my humble opinion. And the last one of the growth stocks that I'll be giving you guys is going to be KWeb. KWeb for that China deal. In the event that this China deal is not everything that people thought it was going to be, and we get some declines into the Monday session, you guys know me, I've been playing these ones on the channel a lot recently. 31.5 down about 29, decent little area down there overall, right? Prior resistance is going to be now support for the bulls, and it's an ETF if you do want to play the China names overall. Special shout out to other names, you know, very volatile names like SOXL, BITX, MSTR, MSTX, right? Anything you guys want to play. If you do choose to play the 2 or 3 times leveraged names, it's fine. Just go small and be somewhat conservative, right? Don't get lured by the premium that you can get very close to the market. Respect the rules, right? And that's how you're not being too greedy, and that's how you don't get destroyed. Now, in terms of the value plays, that was it for the growth plays. Value plays, I'll be giving you guys a couple ones as well. Number one has to be Pepsi. So Pepsi's been struggling recently as of the past few weeks, but as we know, they just paid a dividend recently. We're coming into the bottom end of our support range down there. Pepsi is currently trading below many things, below all of its monthly moving averages, which rarely happens ever, right? The last time that they were close to testing, guys, the 200 monthly EMA, which is this green line, was all the way back in 2008. So overall, I do still like Pepsi down here. I like playing it on red days, especially 1 to 2% down days, and getting as deep as possible on Pepsi pays over a 4% dividend yield. Good company, guys, but has just been dragged down with the headlines over the past roughly year and a bit. With that slowdown in consumer spending, UPS is kind of the exact same thing. UPS has been finding a bottoming out zone overall. Mid-90s, if I could find UPS in the lower 90s, fairly decent range for UPS. Right now, they're paying almost a 7% dividend yield, and it's the bottom end of a roughly, what is this, like 8 years worth of support since all the way back more. 2013 started this area, right? So lower 90s, I would not mind playing UPS. It is also monthly oversold, and so was Pepsi, by the way. Another one we can take a look at is Johnson & Johnson, healthcare play, right? We know that Johnson & Johnson sometimes makes its way down to the lower 150s. If it makes its way down there, prior resistance from 2017 through 2019, and then current support from 2023. It's been range bound if ever Johnson & Johnson makes its way back to the lower end of the range for some which reason. Anything below 150, guys, 150 down to 145 is fair game for value in my opinion. And the last one of the value trade, guys, is going to be Bank of America. Bank of America, a stock that Warren Buffett holds near and dear. We're going to get into Warren Buffett in just a few when we go over the big account names, right? Down here, guys, 43 down about 42 bucks. Not a bad area for Bank of America stock. It's the most recent area of support that we do have. You can see it was resistance back here, support, resistance back here, right? It's a very hotly contested area, and I would not mind playing a couple contracts of Bank of America if for some which reason we get a steep and sharp pullback. You know, Bank of America doesn't move that fast, but when it does and it pulls back into our EMAs and into our overall support range, it could be nice to play a couple of contracts on Bank of America. And Bank of America is also somewhat of a cheap play for the wheel strategy if you're looking for something more cheap on the value side of the market. That is everything for your value plays. Now let's dive into the last one, which is going to be our big account plays. I'll bring you guys 2 big account plays per week moving forward. The first one I'll be looking at is one that I've taken myself, Berkshire Hathaway, right? Coming nicely down very close to the 200-day EMA, 485 down to 470 is the support range. If we have big accounts, guys, I think there's probably not many other more solid companies to play, right? Would anybody mind being assigned shares of Berkshire Hathaway? Probably not, right? That being said, it is a heavy trade. You would need about $48,000 in capital, but down here around the 480 mark, 480 to 470, that is the 50 weekly EMA, that red line there. How often does it get challenged? Not much. Peak bear market of 2022, peak sell-off of COVID, but in normal market conditions, when we come down into it, especially lining up resistance, which will now be current support, very high probability trade. And now we put Berkshire, down roughly 12% from the all-time highs. Usually finding Berkshire 10-12% off recent highs is a decent proposition for the wheel strategy. Second one is going to be one that I've shown on the channel many times. It's going to be Lockheed Martin. So Lockheed Martin down here for mid 460s, 465 down to roughly 445, decent area overall, big support range. The 200 weekly EMA, which is this green line. Look how often LMT tests this, right? It does test it, but every time it does test it, it's usually a good buying proposition. And this is a 5-year trend line. Everything looks great in terms of the monthlies as well. Just extended consolidation for the past weeks, past months on LMT. Very large area of congestion right here. So if I can find some premium, 465 to 442, I've been writing this one for the past 4 or 5 weeks in a row in my own big account, and so far so good. That being said, guys, that is everything I had for you guys today. That is everything for the top 5 options plays, which was more like top 7 options plays and 10, 11 bonus plays. Hopefully you guys enjoyed those. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you back. We do these every Sunday in preparation of the upcoming week. And last but not least, if you have any questions on the strategy after you have watched the down below videos, please feel free to leave them in the comment section, and I would love to help you out as best as I can in terms of mastering the art of the wheel strategy overall. And last but not least, if you guys wanted to participate in a trading and investing community that specializes in the wheel strategy, and you can follow all of my trades, but not only on the wheel strategy, you guys know I do much more than that. Swing trades with shares, swing trades with call options, leap call options, call debit spreads. If you guys want help with put credit spreads, call credit spreads, any types of spreads, condors, feel free to ask me. I don't run all of those, but I'll be more than happy to help you out because I've run every single option strategy you can think of. And these are the ones that we kind of do the most often, but I do help you guys out with every single one in there. You get access, of course, to all of my trades in real time, whether they are the wheel trades or otherwise the directional trades you guys see me do on the channel. Here's just a recap of the past few weeks of the real trades. Everything else, you find some earnings trades in there as well. So far, so good. It's been a good season for us. In terms of that, if you guys wanted access to the Discord, the link is down below in the video description. You get access to the trades, you get access to our private morning live streams, which I do Monday through Friday for about 2-3 hours at the open, where I trade live. But not only that, I take all your questions on your stocks, your options plays, your long-term portfolios, and give you guys very full answers if you can't be there. They're always recorded, so feel free to watch after. You can also ask me all your questions on your stocks, your options plays, your long-term portfolios in our chat rooms. I'm very fast to answer throughout the day, and I also give you guys very long answers, not just yes or no, right? And overall, you get access to our private videos in which I show a lot more detailed explanations for technical analysis, fundamental analysis, all the trading strategies that I use in depth on the channel, how to grow accounts from small, medium, large, which strategies should apply to the size of the account and in which proportion, right? Depending on your account size, very important. And lastly, you get access to all my charts, the options list that I use for all the options plays that I derive with about 250 lists in there, 250 stocks in there. All single watch lists are available to you, and you can copy paste all my charts. It's literally 2-3 clicks of a button. You get to copy all my stock lists, and you also get to copy all my charts. Whenever you see support resistance boxes, whenever you see fundamental analysis on over 200 plus stocks that I do, you get to copy paste all of that, and all my charts become yours, and you can basically have all of that. That is just something as an additional bonus for the Discord members. If anything in that sounds good to you, I'll remind you again, the link is down below. Hopefully I see you in our community soon, and if not, I guess I'll see you guys back on the channel, guys. Have a good week. That's it for me. Take care and peace.